Welcome to San Joaquin Spotlight, a public affairs program featuring conversations about life in the central San Joaquin Valley. This program is brought to you in partnership between KFSR 90.7 FM and CMAC Fresno. I'm your host, Sevag Tateosian. Today in the studio, we have John Shore with the Community Housing Council in Fresno. And, welcome to the program, first of all.
Well, thank you, Sevag. Thanks for having me here.
I asked you to come back. Thank you for accepting my invitation again.
Well, my pleasure.
I asked you to come back because I want to know what's going on in the Community Housing Council's world, because, some rumors are that the housing industry is back on its feet, and some rumors are no, it's not on its feet. So I call you a resident expert. Tell us about what you do and what's going on.
First of all, the Community Housing Council is a nonprofit agency. We're a community-based organization, community benefit organization, and we're there to help people achieve home ownership. And of course, we did that for years until the foreclosure crisis hit, and then we had to switch gears and immediately start doing foreclosure intervention counseling. So for the last 5 or 6 years, we've helped people save their homes through loan modifications. We've helped people arrange their future by helping them achieve short sales, if that was the best exit option for them. But we also do first-time homebuyer education as well. We also help people who are interested in improving their credit with financial management classes. So we do quite a bit for the community, helping people. Again, the end goal is hopefully home ownership.
You just brought a bunch of topics that I'm going to ask you about, so thank you for lighting that path for me, because I'm going to ask you some questions about that. First-time home ownership. 2 years ago, I heard it's a great time to buy right now. Interest rates are low. The other day I was talking to a colleague, and interest rates are still low.
Yep.
I mean, are they not? And talk about first-time home buyers.
Well, as a housing counseling agency executive director, regardless of when you ask me, I'm going to tell you it's the best time to buy.
Right.
And, Sevag, I've been in the industry for 30 years now, and there's been very few times where I would tell somebody to sit on the sidelines. This isn't a good time. We're a HUD-approved agency, and HUD pretty much controls all of the housing industry. And one of the things that they like to say is that home ownership is the platform for getting ahead in life. It's the platform for raising a family. So from that standpoint alone, home ownership should be something that everybody wants to attain. Now, when's the best time to buy? We may be in a marketplace that's ideal for the average person, but if your credit's not in that same place, it's not the right time for you. If you don't have the 2 years on the job or the 2-year work history in the same line of work, then it's not the right time for you. All I can tell you is that Fresno notoriously, the Central Valley especially, has been a very affordable place to live. As you and I know, we've both lived here for quite a while. And many people still come to the Central Valley from other areas of the state and other areas of the country because they find out they get the benefits of living in California without having the high price tags in LA or San Francisco areas. So affordability's always been good. It's better at some times than it is others. The one thing that I want to get across to your listeners is that if somebody is thinking about buying a home, they shouldn't be the one to keep the roadblock there. They need to get in front of a professional, whether they come to a nonprofit like the Community Housing Council, whether they go to a professional realtor, whether they go to a lender, find out if they are mortgage ready, find out if now's the right time for them, and then if they're not ready, get a hold of somebody like the Community Housing Council who can get them from point A to point B, because homeownership really is a platform for getting ahead in life.
And I want to ask you about the right time again, because I get a lot of people saying, we're too late, we missed the best prices, prices have gone up. But for the person who wants to stay in Fresno, does it make sense for them to buy?
Well, Sevag, everybody needs a roof over their house. So whether you're buying or you're renting, most people prefer to be living indoors. And right now, you can still buy a home and have your payment, your principal, interest, taxes, and insurance be just about what you would be paying if you were renting that
And
house.
it would be your home.
That's right, it's yours. You don't have to worry about having pets, it's your home. You don't have a landlord to have to come by and tell you can't paint this room that color. And there's a certain amount of pride of saying that, hey, I'm a homeowner. You know that that piece of dirt out there is yours and not somebody else's. I think that there's a lot of things that go into owning a home. You know, I was born and raised in Hanford, and occasionally I get back down there, and one of the first things I do is drive by the house at 1501 North Whitmore, where I spent all of my youth. And, you know, I sit there and I park next to the house and just look at it and think of all the memories that we had. Remember my mom and dad, you know, getting together at night for dinner. Those are the things that happen in a home, and they can happen in a rental home, but they're more apt to happen in a home that you're buying, in a home that you're a part of the community. One of the other things that the California Association of Realtors has put together is a list of things that really bring home the importance of home ownership. And one of those is the fact that children of homeowners do much better in school. They have a higher percentage of people that are accepted at college, higher percentage of homeowners' children not only go to college, but they graduate. There's less crime in children that and drug use, things that are not good for the community if you come from a family where the home is being purchased or a homeowner.
You know, when we were younger, we moved around several times. And as a child, it was stressful because now you have to move to a new neighborhood, get to know the neighbors, and, you know, you had friends in the old neighborhood that you're leaving behind. And so I vowed that when I have kids, I'm not moving much. So, you know, I had my first kid, and I'm going to tell him when he gets a certain age, look, we're not moving a lot.
That's
so,
right. Well, congratulations.
Thank you. And it makes sense that, you know, what you're saying and what the Association of Realtors is saying, that, you know, kids do better in school when the parents are homeowners. Yeah. That's something that makes sense to me.
Yeah. Having a neighborhood that's stable, you know, people come and go, but it's still, you're part of that neighborhood. You know, there's pride of ownership. You want your house to be the nicest looking house on the block.
Yeah.
And it doesn't have to be the biggest to be the nicest. You know, there's just a lot of things that go into that whole idea of being a homeowner.
One thing you mentioned is credit. And, you know, I've been a big advocate of, you know what, don't pay late. Even if it's the minimum payment, don't pay late, don't pay late. But people who come to the Community Housing Council, can you help them with their credit? And what are you seeing out there?
Well, you know, unfortunately, because of the economy, we've had a lot of people that have gone on unemployment, or certainly a lot of people who've suffered underemployment because of the layoffs, cutbacks. I mentioned to you before we went on the air about we've had to do some cutbacks at our office as well.
That, you know, I'm going to stop you there. And that hurts to hear because your staff has always been great. You know, in my previous life when I was at the United Way, for the record, you know, I dealt a lot with your staff. And you know what? They knew what they were talking about, and they knew how to interact with people. So.
Yeah, and it is sad that we have to go through layoffs. But, you know, it's part of business. It's part of life. But getting back to the credit issue, we've seen people come through the door who are interested in buying a home. And by the way, we have more and more of those people calling us, which are good signs. But they're calling us because at the Community Housing Council, we're not there to sell them a house. We're not there to make a loan for them. So it's kind of a safe haven, a place that they can come and get some straight answers without feeling that we've got some ulterior motive in mind. And yeah, if you come in the door with a low 500 credit score, then we can tell you about a program that we have. We call it financial management. Sometimes it's called financial literacy. Sometimes it's called credit counseling. Whatever you want to call it, we're getting you from point A to point B. And sometimes that means it may take a year, it may take longer. I had one client that it took a year and a half, but she held in there, stuck in there, did everything we told her to do, kept coming back every 30 days, and about 18 months later, her 525 FICO score went up to 640.
Wow.
And yeah, and I told her, you know, you're ready to buy. And that weekend, she went out, talked to her realtor, put a house in escrow, and 35, 40 days later, she's moving in.
How excited are you as the Executive Director of Community Housing Council? Here you have someone that's come through your office, 500 credit score. You built her credit up. Now she's a homeowner in our community. How excited are you?
Very excited. And you know, Sevag, I've been doing this, not with the Community Housing Council, but as a mortgage lender and as a real estate broker for over 30 years. And I got real excited the first time I made that phone call to somebody and said, hey, your loan's approved, you're going to be a homeowner. I still get that same excitement when I see somebody know that they're going to be able to qualify. Sometimes they're a little disappointed because they'd like to qualify for more than what is out there as far as availability. And that's something we probably should bring up here, is the fact that there are some very good down payment assistance programs for first-time home buyers that can help bridge that gap from what somebody qualifies for to what is available for them to purchase.
Talk about that, because I know there are some programs, like the first house that we bought, there was something called the FHA loan where 3.5%,
Right.
we were in the house. And 3.5% of $100,000, it's not really much.
No, it isn't.
Talk about some of those
Well,
programs.
and that loan is still out there. You weren't the last one to get one, and more and more people are qualifying for those loans. But there are times where people have the credit score they need, they have sufficient income, but they don't have that 3.5% down payment. So there's a couple of programs that can be coupled with the FHA loan. The state of California, through the California Housing and Finance Agency, has a program that will actually loan to that potential future homeowner the up to 3% of that down payment requirement.
That's incredible.
It is incredible. So now you're seeing people with only 0.5% down moving into homes. Now, some of the banks, because of the Community Reinvestment Act and their requirement to do something for the communities they serve, they've got some programs where there is 0 down payment with the right credit. They have to buy in certain census tracts, so it's not every home is available for that. But I'm telling you, there's more programs right now for first-time homebuyers that need some assistance than I can remember in a long time. Because, when the market crashed back in, let's say, 2007 is kind of when I saw it falling, all of those programs went away. And it made it very difficult to buy, and everybody was afraid to buy because they didn't know what the future. Things are starting, it feels like springtime. It feels like the flowers are blooming and people are interested in buying again. Consumer confidence is at a pretty high level now, things we didn't see for years.
This may be off topic, but if you can address it, that'll be great. The other day I was talking to somebody, and this person was kind of upset that they didn't lock in at 3.35%, and instead it was 3.6%.
Yeah.
So they were
Let me get my violin out.
But and they brought up a good point, which I hadn't thought about. That 0.03%. Is that a game changer? I mean, should this person say, you know what, I didn't get the 3.3, and I'm not going to go for it at 3.6? Yeah. Should that be a game changer?
Not for that small of a difference. What you have to understand is the mortgage market is a market, and a market means that prices change all the time. You go to the store, today a head of lettuce is this, next week it's going to be that. That's a marketplace, and we don't have any control of what those prices are going to be. So, I had to stop and get gas the other day, and it was a little bit more expensive than the last time I bought it.
By the way, I noticed too the other day.
So it's like, one side of me thought, I wish I'd have filled up last week, but guess what? I didn't need to fill up last week. So you're kind of at the mercy of the market. And, lenders are in the business to make money. Let's not make any mistake about that. That's their careers, that's their job. So for somebody hoping they're going to get and I don't remember the exact interest rates, but let's say a 3.625 interest rate, and they didn't lock in and rates went up a tiny bit, that's the marketplace. It's just like you should have bought yesterday, you should have locked in. How do we know that? I did a loan early in my career for a fellow who actually ended up doing probably 2 or 3 loans for him over the years, and he was a CPA and a pretty sharp individual. And I remember him telling me, he would call me every day wanting to know what the rates were and do you think I should lock in? And I remember telling him, look, I don't have any crystal ball. I don't know any more than probably you know. And I said to him something to the effect that, you're probably not going to catch it at the very lowest. That would have to just be a
perfect timing, perfect luck.
And in my case, I know that's not going to happen for me. So he said, you're exactly right. And he says, but you know what? I like what I see, and this is important. If you like what I see, lock it in. And just remember, that lock is a commitment that the lender's making to have that money ready when you're ready to close. Now, what if the lender wanted to break that lock and say, well, rates went up a little bit, And, Sevag, we'd like to raise the rate on you because you didn't close your loan yet and you need to make a little more money. You wouldn't like that, so you need to respect the fact that when the lender locks that loan, quit asking what the rates are because it doesn't matter. You've already purchased
Locked.
the money. Yeah, that's right.
And, personal experience, when we were purchasing our first house, to me, it didn't matter that I was 0.01%. To me, it made sense, and I knew that it was lower than the 6 or 7 people were paying years before that. Yeah. So we locked because of exactly what you're saying. And, and are you seeing more people do that? I mean, are people really analyzing the minutia, like I call it?
Yeah, I got to be honest with you. I don't work with it at that level anymore. But the people that I do work with, one of the things that we try to educate them is don't get hung up on that interest rate so much. Look at the dollars. And if your payment works out to, and I'm going to just pick a number, $949, people are going to remember 900. So if the payment ends up being $969, they're going to remember 900. And that small difference, yeah, if you take the $20 difference times 360 months, that's a lot of money, but that's if they keep that loan for 30 years. And most people don't keep a house for 30 years. Now, I got to tell you something. You said you got your first interest rate at what?
It was 3 point something.
Do you know what my first interest rate was when I bought my first house in the early 70s?
Early 70s, tell us.
11.75.
Wow.
And I thought that was a great rate because they had just come down off of 14%.
Wow, that's incredible. Times have changed.
Oh, haven't they? Yes.
So someone comes in community housing council, you kind of set the path for them, what they need to do to purchase the home. So we're talking about credit. We've talked about down payment.
Right.
The other thing that may catch you is the 2 years of employment. Talk about that.
Well, lenders would like to see that you've had at least 2 years in the same line of work.
Same, and I'm going to stop you there because some people may have worked at a department store for a year and a half, and then they change and work at another department store for 2 years. Now, that's the same line of work.
Same line of work, not a problem, yeah. Where you run into problems if somebody might, and I had a lady the other day who called me on this. She is working for, I believe, Tulare County, but she's only been there about a year. I said, what's your previous employment? Well, she said, I work for Kings County. I said, well, how long did you work there? She said, about a year. So she's got 2 years, same line of work. Now, what she does for Tulare County is a little different than what she did for Kings County. So that's something that the lender's going to have to make the call on. That's something that I can't do as a counselor, but I have to tell you that when I did work as a loan agent, that would be something that I would say, we need to move forward. We need to find out for sure if that's going to be the stumbling block. But generally it's 2 years, same line of work. If somebody is self-employed, again, it needs to be 2 years of self-employment. And sometimes that's a little bit misleading because quite a few people out there have become self-employed. This economy has caused them to take their trade and make it their business. And not only do they need 2 years of self-employment, but they need to have 2 years of tax returns self-employed. So that could stretch it out to closer to 3 years.
Talk a little bit about the up-and-coming family or the young family that's on the border right now.
Okay.
Pretend I'm the husband.
All right.
And try to tell me why I should purchase a home right now.
Oh boy, how much time do we have? I could talk on
That's
that
a loaded
one.
question.
Yes. I don't think there's any question that there's a huge benefit in being a homeowner. Somebody who bought a home 6 or 7 years ago would probably argue that point with me, and rightly so, because they purchased a home probably at the top of the market, and as homes deflated in value, they're looking at themselves as, what did we do? Why did we buy that home? And in many cases, people have lost those homes because they lost their job. They've had to either lose the house through foreclosure, or maybe they had to do a short sale, which again can be pretty significant on your credit as well. But when you look at the big picture, and this is what you need to look at, the big picture, and I'm talking home ownership for 10, 15, 20 years, Fresno has always been a marketplace where we have seen about 7 to 8% per year inflation, appreciation should be the better word, appreciation of the value of your home. So I'll give you an example, and I love this example because it's my own castle. This is the house I bought, And I'm different, Sevag, as you know. I bought my house, and I've been in it now 36 years. So I haven't moved around a lot. Now, I'd like to say I have it paid for, but like a lot of people, I did some cash out and did some other investing. But when I bought that house, I paid $145 for it. And it was at a time when the rates were like around 10, 11%. It was tough making that payment. But I bought the house, and the house for 10 years didn't go up in value. Now, I was a little bit disappointed in that because I kind of thought I was buying an investment. So, but I had to kind of pinch myself and remember, hey, wait a minute. I've had a place to live that's mine. I've made it the way I want to make it, and it's my home. And if I hadn't been buying this home, I would have put the same amount of money out in rent, and what would I have had? A bunch of rent receipts, right? I would not have had anything I could call my own. Okay, so let's fast forward now. 10 years after that, in other words, 20 years in the home, now guess what that home is worth? It had gone up to $525,000.
Incredible.
Yeah.
Incredible.
And at the top of the market, it was probably worth about $750,000.
That's
now,
incredible.
If I would have had that crystal ball, I probably would have sold the house then, but I didn't. And the house came way down in value to like around $300,000. But I would like to think the house has gone back up to maybe $375,000, $400,000, and I still paid $145,000 for it. I'm still way ahead of the game. And yeah, all that extra up here that I never saw, never got, life goes on.
You bring up a good point because I know people that shoot themselves in the foot all the time. Why did I purchase this house? Yeah. Why didn't I sell this? Why? Yeah. So what you're saying is big picture. Remember, you're in the long run.
Exactly, yeah. We see a lot of people that would like to have a modification on their house, and I'll ask them, well, what's your hardship? Why would you like a modification? Well, the house isn't worth what I paid for it. Well, if you read your loan documents, nowhere in those loan documents does it say that this house is going to go up in value. So if the payment is the same as it was when you sign that contract, remember it's a contract you sign, and if the income is still the same as where it was when you bought the house, the value doesn't make any difference unless, of course, you wanted to sell the house. Then it makes a huge difference. But I say stay in that house, ride out the storm. Property values are coming back. I believe they're going to continue to come back. There's nothing in the future that says interest rates are going to go up. I don't see anything that's going to cause them to go up. They're at historic lows, so we know they will go up at some point, but I don't see that coming really quickly.
Talking about modifications, so we were talking a little bit off camera. So do you help individuals that are in the home actually,
right,
that need a modification and are going through hardship? Talk about that a little bit.
Well, the first thing I want to get across, and I know that you know this, but I know that you probably have some listeners that are not aware of this. The government has funded agencies like the Community Housing Council through a program called the National Foreclosure Mitigation Counseling Program. We just call it NFMC for short. And there's agencies all over the country. So if you have a friend in Florida and listening to this show, they can go on the HUD website and find that agency that is being funded to help you retain home ownership. Unfortunately, there's been a lot of scammers out there trying to take advantage of people, and we still, Sevag, see that happen on a weekly basis where somebody will come in, they've paid somebody as much as $5,000 and $6,000 to because they've promised that they're going to save their home, they've guaranteed they're going to get a lower payment, and once they cash that check, those people don't answer the phones anymore, and many times they leave town and go to another town. We've seen way too much of that, and it's real prevalent, especially in outlying areas of Fresno County. So I want to warn your listeners to don't be sucked in by those people who are out there scamming you. If somebody wants money up front, if somebody's making a guarantee, somebody's making promises, walk away. They're not the right people to be dealing with. Look for somebody who's funded by the government. That means you don't have to pay. And we can do a better job than those scammers, because the scammers aren't going to do anything for you.
How can people help you? I mean, I admire the work you do, like many nonprofits out there in our society, where the nonprofit community is overworked and underpaid, and the need is great. But as far as people, how can they help you?
Well, obviously, if somebody wants to open their checkbook and write us a check to help us, that's nice. Donations we always accept. But it's even more than donations, because one of the most frustrating things is that people who have struggled for years and maybe even lost their house, then they find us. And it's like, oh, you should have found us 6 months ago. You should have found us a year ago. A nonprofit does not have money to go out and advertise. You know, you have to be a big nonprofit to be able to do that. We're not that type of nonprofit. Excuse me. So one of the things that I would encourage your listeners to do is spread the word. Let people know that there is an agency called the Community Housing Council. It's a Fresno-based agency. We're not some big conglomerate out of Texas or someplace. We're an agency that was started back in the late 90s. And I'm proud to say that I was one of the founding members.
I was just going to mention that.
But it was founded by a group of real estate agents, a group of lenders who knew the importance of home ownership. And we've evolved into doing the foreclosure counselors as part of the piece to help preserve home ownership.
Talk a little bit about how they can get in contact with you.
Well, we've got a great phone number that's easy to remember. It's 559-221-6919. That gets you to the main operator, and just let her know what your situation is, and she'll route the call to where it needs to be. One of the things that is my pet peeve is I do a lot of talking to people like you, and everybody wants to write my name down and ask for me. And all that does is slow the process down. You talk to the first person who answers the phone, tell them what your problem is, and they'll tell you what we can offer you and get you into a program right away. If you ask for me, it might be 2 or 3 days before I can get back to you. And I have a hard time when I talk to somebody and find out that, geez, if we'd have had an extra 3 or 4 days, it would have made a big difference.
You know,
here.
I was just going to say that. Sometimes in these things, 2 days matter.
Oh, it's huge. Yes, absolutely.
We are out of time this week on the program, but I want to ask you, you talked about how funders are lending for first-time home buyers and people buying houses.
Right.
It sounds like they're also modifying, too.
Yeah, you know, as we get toward the end of the housing crisis, a lot of these lenders are realizing finally that they're better off to help people retain home ownership rather than just foreclose, because a foreclosed home brings everybody's value down. We don't need any more of that. Plus, the Keep Your Home California program, which I'm sure you remember, that funding has to be used up by the end of 2015. There's no guarantee that feds are going to give us more money there. So that program is being sweetened all the time, offering more people money within California if they live in the home and if their lender's participating. So we are an approved agency for that program as well.
We're out of time this week on the program. Thank you so much for coming on the program.
Well, thank you for having me, Sevag. It's always a pleasure.
That's all for this edition of San Joaquin Spotlight. To the volunteer crew that made this production and every production possible, thank you. Their names appear at the end of the program in the credits. We couldn't do it without you. Thank you to our audience members listening to this broadcast on 90.7 FM, KFSR Fresno, and those watching on CMAC Television. Of course, thank you to our guest, John Shore, who educated us about lending and all that stuff today.
Great, Sevag. Again, my pleasure.
Tune in next week for a new edition.